everybody. Welcome to our monthly market update with Murdock Manwaring Company, a real estate group at Keller Williams Realty East Idaho, where we go over last month's real estate market. So we're so excited that you're joining us today. If you are interested in real estate, we are here a local real estate team based in Idaho Falls, but we cover the entire Southeast Idaho market. And if you're looking to buy or sell a home, we would love to help you. And if you'd like to get these market stats in your email each month, make sure that you are going to mmcidaho.com and click on get the newsletter, or hit subscribe or hit like and follow on the page that you're watching it on, and you'll keep in the know on all market stats. And thanks for joining us.
Perfect. Thanks, Jessica. We've got part of our team here to contribute, but let's start right at the beginning. How about that? Here we are, 2024 May, coming out of the first quarter that's somewhat has some seasonality, right? Some rollover from winter of 2023. So let's see what we're doing here in the spring. Here is just Bonneville County. So we talk a lot about the 4 counties all together, but then we break them down a little bit as well, just so we can see Bonneville County. So the home sales from last year to this year, just the month of May, we're actually down 10%. So the number of families, people, individuals, homes that have sold, we are down from 155 to 139 this year. New listings on the market were also down. So less homes are selling, less homes are coming onto the market. We're down about 1.8%. So the days that homes spend on the market, if once they hit from when they go active to when somebody actually gets in contract, we're down 5 days. So the ones hitting the market are actually selling a little quicker in May this year than last year. And we look at that as a leading indicator of what we can anticipate is going to happen, because it's showing current buyer activity, which that same buyer activity is being compressed and seeing some affordability problems come in because of these interest rates, right? Last year we were at 6.4, and now we're kind of averaging 7.1, which makes it much more expensive to buy a home, especially as prices have increased.
With that, Jeremy, one of the things that I like to talk to my buyers about is how that changes your buying power. How does the interest rate make any difference? People are like, oh my gosh, prices are up or interest rate are low. That interest rate changes your buying power.
Sure does, because that interest has to be paid on a monthly basis, right? And so if they're charging you more interest, that's just more out of your pocket, less to the house, more to the interest.
I think as we look at those days on market and we see those coming down, that should give us a leading indicator that the market is tightening. If houses are on the market less time, they're selling faster, that should give an indication that the activity is good. But yet we look back at the home sales, we're down 10%, and we're down almost 2% on how many are coming on the market. But so as we watch that, those are kind of lagging indicators, or closed sales. New listings are kind of at what's going on right now, and days on market should give us a preview of what might be coming down the road.
Yeah, exactly. Because that absorption rate says, you know, how many buyers are currently in the market. They're going to gobble up the available homes. And if no other homes hit in 2.8 months, all the inventory will be gone. We usually like to see 4 to 6 months to keep that balance. So we're below that average of the balance. So it's probably a seller's market still, especially with less inventory coming on. Not a lot less, but that is a trend. So, and prices have kind of stayed the same. Not a big increase or decrease. We are seeing a little bit of tick up there, but stable. Here's Bingham County, a little smaller market to less numbers to kind of bring the averages around. Does anybody want to take a stab at Bingham County? Jessica, why don't you kind of tell us what's happening down there?
So I really love Bingham County, and I'll tell you, I've predicted this before. I think it's our dark horse of Southeast Idaho. If you're looking for opportunity, Bingham County has it. I think they will have their day, and people that bought houses now will be happy with those results. So you can see here that we're just down, it's 16%, which, out of 37 homes last year, 31 homes it feels a big dip, even though it's only 6 homes that have changed. But we're also down quite a few on new listings. So what happens when we don't grow our inventory is then it gets to be more of a seller's market. There's less homes available for the buyers. So we have less homes coming on the market in Blackfoot, and our days on market have ticked up. So that is, that gives all the indication that maybe we're going to tighten up and you're going to see some prices increasing in Bingham County. And look over there, 6.1% up on prices. So when the supply and demand changes up, you see those prices go up, and the absorption rate goes down. That means our inventory is down. So it looks like right now, Bingham County's heating up.
Yeah.
Well, when you have a local realtor, you get local info. We like to be hyper local. We know there's going to be a new high school built south of Idaho Falls. What does that impact? Bingham County. If you want to live not in Idaho Falls, but you want to be close, when there's high schools built, that's a population boom. They're saying we know that there is going to be movement that way. So when you've got a local realtor, those are the kind of insider stuff that you know.
That's right. Let's get into Fremont County. Might be a little more difficult to actually get accurate numbers because of the limited number of sampling. So how about Jefferson County?
Well, before you go on from Fremont County, if people wonder what this is about, because look at that absorption rate.
Yeah.
What people don't know about, if you don't know Southeast Idaho, Fremont County encompasses Island Park. And Island Park is our resort area. And whenever a market tightens, you see it on the resort area, the higher end tightens first, right? You might see the number of sales slow down in a resort area, but look at how many listings have come on the market.
Yeah.
Versus sales. So you're seeing 66 homes coming on the market, but we only sold 13, which is what ticks that absorption rate up. But if you didn't know, Island Park, our resort area right up there by Yellowstone, the gate of Yellowstone, that's where this encompasses. That's beautiful area.
And we were talking about that's a market within a market. So when you're shopping in Island Park and you're looking at Fremont County, we can see from these numbers, they're just not the same as Idaho Falls. That are a market within a market, which again leads to having a local realtor is the best way to go.
That's
right.
And
this market will heat up this month because you don't see as many sales up there because it's very snowy and very wintry. We have become the summer is when homes up there get sold. So you'll see a lot of activity through the summer.
Snowy and wintry. I like it. So Jefferson County and Bonneville County, a little more similar to the numbers that we're seeing. New listings again are down, days on market are down, so absorption rate changes. There are more transactions, more homes selling than last year in Jefferson County. And price has ticked up a little bit on average in the month of May. So
just a little anecdote from my out with visiting with the people. Someone said, oh my gosh, it's more expensive to buy in Jefferson County now. What do you guys think? Why do you think that home price is up 5.2% Jefferson County?
It's a good question. Good question. It's
I think a big thing is size of lots. You got bigger land chunks up there. And I think it's like Jessica said, Bingham County is the dark horse. I think Jefferson County was the dark horse, and now it's been discovered.
Got it.
There's been a lot of new construction.
County, it's awesome. Yeah.
A lot of new construction in Jefferson County. They go for bigger lots. You see a lot of luxury homes being built in Jefferson County along the river. Very beautiful. So yeah.
Yeah, good point. And what drives existing home prices up? New homes, new construction. So Madison County, real similar, not a big sampling there, but you can see some of the things that, days on market, maybe the inventory did go up, but it's taken a little longer because the inventory is hitting quicker. And so there's more to choose from, and we're seeing some of the effects there.
And we'll see Madison County, they have their day end of July, August, right before school starts again. People come in, are looking at housing. you'll start to see them looking to buy, and we'll start seeing closings there in July and August. That's their hot market.
Good point. Here's kind of the flow of listings in our market over time. This a lot of data on this sheet, but I do like that the first column here, new listings for the each individual year, and then how many of those listings never sold. So they either expired or they withdrew from the market. Back in 2010, 74%, 7 out of 10 houses that hit the market never sold. And so you see those percentages change over time as rates got lower, things in the market changed. But the lowest we saw there is 10% in 2021, and then it ticked back up. And so right now we're seeing 22% of homes hit the market that don't sell. And then this contract termination percentage was interesting in 22. You see that bump, and then we're slowly coming down back to some of the average. What does that mean, Brett, when we got contracts that terminate? Or Ashley? We must have an internet problem. Mike or Alex, you know what that means, right?
If a contract terminates?
Yeah.
No, I don't know. I'm sorry, I don't know what that means. No.
No problem. This is kind of a new one that we call it something different, but it kind of the fallout ratio, right? So buyer and seller come together. They say, I want to buy your house. They agree on price and terms, and then somewhere before the date of closing, that contract falls apart. And so we saw that quite a bit in early 22. Rates changed when people were real excited about 3%. They went right up, and we saw a lot of contracts terminate. And then we've come down, and we're seeing less of that, but still with, we talked about affordability and the compression that buyers are feeling, that still a short decision period that they have to make and get into a house, especially the first-time home buyers. And then some of those are falling apart at a higher rate than we saw in previous years. So just like Nicole's saying, it's important to have a good conversation before you get into a contract. And we do that initially with everybody that we meet with, sit down, cover the entire transaction, educate. So once you get into a contract, you don't feel like you have to get out of it, because you've already had the information given to you up front and the decision is made. Any other input anyone has on that? Good. Here's new construction. Jessica, you want to speak about this a bit?
Yeah, this one's super interesting because I love to see the pattern that you can see when you look at it over time. And this is really, when we talk about new construction drives the price of existing home sales, this is where you see it. Because you watch that cost of construction, that cost, builders, when they sell a home, they don't sell a home necessarily based on what the comparable homes are selling for. It's cost of a construction that drives the prices that they sell homes for. So you can see over time, as they've ticked those prices up as a result of the cost of construction, that also brings the whole amount of the whole market up as it goes through. So you see our first home ever over $1 million in new construction. When did it happen? Not even until 2019. Pretty amazing to think about that in Southeast Idaho, that was our first time. And then you see those numbers starting, and then we hit 1.25 last year that they had their first one, the new construction homes being sold on the market. So you can start to indicate and watch how that's going to happen. You'll see that tick up over time. And this is a fun way to look at it because it's easy to see the pattern.
And one of the things that people forget is they think that they want to blame someone for the rising prices in houses. Let's say that they want to blame somebody, but it is kind of like, the price of everything. The price of eggs goes up, the price of milk goes up, the price of construction goes up. And with that, it just drags home prices. So it's not that there's anyone to blame. It's just like Jessica said, price of construction has gone up dramatically.
Whether it's materials or labor, that will bring the cost of a new construction home up.
Right. Yeah, that is an interesting flow, isn't it? That in the price ranges, and it just starts going up over time. So here in Bonneville County, that's a lot of data, but we can send you these slides if you really want to dive into them. Inventory levels, we're seeing inventories, over time. We had a ton of inventory in 2010, and we've just seen that decrease. 2021, when rates were really low, inventories were super low. Now we're seeing a little bit of a trend up.
Go back to that slide before, Jeremy. I think there's that important. If you're going to look at anything, look at that year-to-year change of the price. Look at what year it jumped, 223%. We went -1, 6%, 223%. We were below, I keep telling this to buyers, Idaho Falls, Idaho, we were not on the radar. We were below the national average forever. In COVID, we had to make up that difference in coming to the national average. So that right there, it just brought, that's why we had such a huge jump, is we were so far below the cost of a national average home. And we had to make up that big gap. It was a little painful.
What I think also is really interesting in that same scenario is you saw the inventory jump in 2022, and this happens a lot because they're like, are we going to miss the train? 2021 was happening, and 2022 is when people go, oh my word, we're going to miss our opportunity, and they probably had already missed it by that time, because we saw our highest fallout rates in 2022. That's when rates started to go up. So you started to see that change a little bit, and the inventory stuck around a little bit longer, but it's fun to see those numbers. Our inventory in 2021, that was the unusual market, and you see it right there in inventory.
Yeah.
So kind of interesting.
Good points. Well, the Fed is meeting today and tomorrow to see what the policy changes are going to be for interest rates. So we're keeping an eye on that. Hopefully we get a little less compression from rates, pushing affordability down so we can afford more. The summer season is always good. People don't mind moving in the summer. One thing that I have noticed is there are a lot of older homes getting remodeled, and I think that that's due to people holding on to their interest rate, right? Not as much inventory coming on the market because people can't justify buying a different house and losing that 2 to 3 to 4% interest rate and going to the current rates today. So we're seeing a little bit of that battle in the market, but things are still moving. Prices are staying stable, and we're still excited about our area. So appreciate you guys joining us today. Do what Jessica said. If you want these full slides and more, just send us an email or comment on this link. But appreciate you joining us. And
can we cancel out that audio about do what Jessica says? Could that never be spoken again, please?
So let it be written. So let it be done. But yes, if there's a ton more stats, if you're a data nerd, go to our website down below and click on get the newsletter, and you'll get a big package, and there's way more to see. If you like it, it's super fun to look at. And of course, if you're having a trouble interpreting it, give us a call. The best way to know how the market affects you is have a specific conversation with us about your situation. We'd love to help you.
See you next month.